Hello and welcome back to the Note. The rebound continues, buoyed by data which may not be very great, but that isn't bad enough to derail a rally now that the momentum has turned positive once more. Today we had services PMI data for the US and various other countries. It wasn't good. We saw another very small decline here in the States, but it wasn't bad enough to really cause any great fresh concern. Now, if we take a look at how emerging markets are doing compared to the S&P, viewed through the lens of the very famous or the most popular ETFs that cover them, with their ticker symbols of EEM and SPY, you can see that emerging markets have now actually beaten the S&P for the year, that there is some kind of a meaningful recovery going on there, arguably. Now, we've had false dawns before. Obviously, you can see back at the end of last summer, you had a similar move, and that eventually dissolved into a further big sell-off. But it is intriguing that at this point the emerging markets were the apex of concern, and they are beginning to show some signs of a lead. You could also look at the Dow transportation sector now actually up for the year. That's a sign that sectors that are normally regarded as cyclical, that have been particularly sold down, are now beginning to lead the recovery. If we take a look at metals, it's also very intriguing. The blue line there is the Bloomberg Industrial Metals Index, generally regarded as a very important indicator of Chinese demand. And as you can see, first of all, still very unimpressive, low, unhealthy number. But secondly, plainly picking up from where it was at the bottom, actually up for the year now. Some indication that conceivably the bottom has been reached. Then with the red line, we're looking at precious metals. In the case of gold, another very significant move up today to a fresh high for the year. In general, precious metals showing one of their more convincing recoveries for a while. That does suggest that the extreme deflation scare that we have seen recently may now be dissipating. It also, rather more worryingly, indicates that great nerves about whether the central banks still have the ability to control the situation persist. But there it is for the time being. Too early to call a definitive bottom, but clear signs of some recovery in those areas that have caused greatest angst recently in emerging markets and in the metals. Next stop, the US jobs report.